Good evening, ladies. Welcome to Module 2. I hope everyone is doing well this evening. It's currently 7 p.m. South African time, and I'm your host for Module 2 for the entirety of Module 2. And my name is Chantel Snyman. So, again, welcome. If it is your first time, first time joining a module at all, welcome regardless. And yeah, I hope you have fun and you learn as much as possible. So let's get right into the lesson, right? So the agenda for the lesson will be technical analysis as well as chart patterns. Okay, so that's what we'll be covering in this lesson agenda. And yeah, let's just get right into that. So I just want to send out a disclaimer, which is that any opinion, news, research, prices, analysis, or any information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. So please kindly note that while you are here. And again, for those people who are just joining us, welcome. This is Module 2, ladies. And I'm super excited for us to be learning about everything that we'll be covering in this lesson. So a little bit about me. I'm Chantel Snyman, better known as Africa's best female trader, and I am the winner of the most influential female trader 2024. I'm the only female trader on a trading floor in the richest square mile in Africa, which is obviously right here in Sandton City. And yeah, mentored over 10,000 people across Africa, and I've made over 5 million rand of AUM. So that's just a little bit about me, and yeah, just basically introducing you to who you are listening to. So let's get right into the lesson, okay, ladies? So in the first thing that we'll be covering, it will be the triangle chart pattern. Okay, remember we will be starting off with chart patterns first. So the first, chart pattern we're going to be taking a look at is the triangle chart pattern. Now, excuse me, what is a triangle chart pattern? I will also be answering some of your questions right here on the YouTube stream. So feel free to ask any questions because I will be answering some of those, but I'll be mainly focused on the lesson. Okay, we will have a Q&A session at the end. However, feel free to comment on the live stream that is currently happening on YouTube. So a triangle chart pattern depicted by drawing trend lines along a converging price range that connotes a pause in the prevailing trend. Right? So basically, there will be a pause before the trend prevails. Now, what that means in visual format, I will be showing you in the next slide. So technical analysts categorize triangles as continuation patterns, right? Meaning that a trend will continue in the same direction after a continuation pattern as it did before. Okay, so one thing you can understand and you can take with you about continuing something, it always means that something happened, then there was a reason for a pause or a slight stop, and then it continues from there. Okay, so there are different types of patterns. Okay, there's different types of patterns. We have symmetrical triangle, we have the bullish and the bearish triangle, we have the head and shoulders pattern as well as the inverse head and shoulders, we have flags, pennants, rising and falling wedges. Okay, so these are very common patterns that are used by technical analysts. I've used, basically all these patterns as well. And you will be using them too, because I believe that, by the end of this module, you need to have somewhat of an idea of how to be able to discern between patterns. And not only that, but to identify them on your chart. Okay, so let's get into the first one, right? We have a symmetrical, not asymmetrical triangle, but a symmetrical triangle, and there are pictures that are depicted over here on the right, and you can have an idea of what a symmetrical triangle looks like. Okay, a symmetrical triangle is a chart formation, also known as a consolidation. Now let's see in the comment section if anybody can tell me what they think consolidation means. It's a very simple word, so I want to see how you guys how far are you guys with what you've learned. So, what is a consolidation? What do you think it is? It is definitely a conversation. So, feel free. There aren't any wrong answers. We are all here to learn. So, write that right now in the comment section, and let's see. Let's see what you guys have to say about that. Feel free to comment as much as possible. Yeah, I'm really interested in seeing what you have to say. Someone by the name Komoto says retracement. No, retracement is something completely different. Komoto. That means you guys have a lot of homework to be doing. I just want to get one more response, or one more response from anyone who thinks they have an idea of what a consolidation means. Like I said, there aren't any wrong answers. We are all here to learn, and if you're being corrected, it just means that it means something else. Okay. When a chat is when a oh okay, I believe you want to say when a chart is moving in equilibrium close range for a period of time. I mean, yes, you're pretty much consolidation partner means a trend is about to change, a movement with no direction, when there's no highs and lows, when the market moves sideways, when the market is ranging. Exactly. Those are all correct answers, right? So when we are taking a look at a symmetrical triangle, right, it is also known as a consolidation. Now, in this instance, it is generally formed when the trend occurs as a continuation pattern. This pattern incorporates lower highs and higher lows, right? But you can see that irrespective of the fact that there are, lower highs and higher lows, there isn't enough movement in the market, right? It's not moving drastically. It does not stick out to you, and I'm going to show you exactly what that means. Okay, so they result in a continuation of a current market trend. So as you can see over there, one thing I want you guys to understand is something very important, right? When you're taking a look at a pattern, I need you to be how you'll be able to identify is by understanding the characteristics. What are you looking at in the first place, right? So how are we able to identify? Just using this tiny little depiction over here on the right, we see here that there's this massive impulse, right? We have this pole-like structure, this pole-like candlestick over here, and then we have lower highs and lower lows, but it's nothing as drastic as this. You see, this is extremely drastic. This is, there are higher lows and lower highs definitely being formed, but there's no drastic movement in the market. It's basically just ranging, right? And then immediately after that, and you can see over here at the tip, we have a converging point, right? So the converging point would serve as like a meeting point, right? The sharp meeting point. So that's what we have over here, right? And then immediately after this, this movement, we then have this breakout. Right now, if we take a look at this breakout over here, it matches what was going on back here. What do I mean by that? So you see the massive impulse. This is bullish, right? So the market was going up, caused this massive impulse over here. There was a consolidation, and then we do what? We continue going up. That's why it's called a continuation pattern. That is because it went a specific direction and then took a slight pause, and then it continued moving in that initial direction. So that's basically what it's like. So whether it's a reversal or it's a continuation. In this instance, we are looking at a continuation pattern. The succeeding moves could fairly be discovered by means of a potential breakout, especially guys if you are still learning how to, you're still learning how to be trading and things of that nature, or you're still learning technical analysis, let's say that rather, when you're still learning technical analysis and patterns, and how to discern, or rather how to figure out when to enter, I would always suggest that, especially if you're a beginner, to always wait for a breakout to determine whether you are supposed to be moving in that direction, right? So that is one thing that I want you to always also bear in mind. Okay, excuse me. So that's basically what we have here with the symmetrical triangle, and that's the way you can actually identify a symmetrical triangle. Have an example. This is another example of a more realistic chart, right? I see that some of you have been saying that MetaTrader 5 has been acting up, kind of have been experiencing the same thing as well. However, it depends on, devices as well. Yeah, it's been acting really funny, but it's completely, you just need to shut the app and then reopen it. It should be okay. Yeah. So anyway, on a realistic chart, when we take a look at this chart, we have the Great British Pound against the Australian dollar, which is a GBP AUD, and we can see here on this 30-minute chart that we have identified a symmetrical triangle. How do we know we've identified a symmetrical triangle? We take a look at what the characteristics of the symmetrical triangle is, right? So we take a look at this. Firstly, we have this specific downtrend going on over here, right? And then we have a moment of consolidation over there. The market's not really doing anything. It's just moving sideways. There's no we're going up or we're going down. It's literally just moving sideways, right? But how do we know that this in particular is a symmetrical triangle, right? We take a look at our highs getting lower and our lows are getting higher. So obviously when the lows are getting higher, it's moving this way, right? But then when the highs are getting lower, it's moving that way. And now inevitably that would cause a converging point, right? A meeting point. And that's one of the traits, or rather one of the characteristics that we'd be able to identify with a symmetrical triangle. Now immediately after that, we have a breakout, right? So we always have to wait to see if it will be breaking out, right? And once we've seen that there is a breakout, this is now when you have confirmation that you have identified a symmetrical triangle, and it's basically doing what? This is one of the continuation patterns. So as you can see, the market was moving in a downward direction, and then we had a bit of a pause here, and then it continued right after we confirmed this breakout over here, right? We broke out and then it continued going down. Now, another thing I will definitely say, another thing that I will definitely advise to you is you must never, ever, right? You shouldn't, let me rather say this as a suggestion. You should not ever place a trade off of one confirmation. Now, what does that mean? That means that, you are seeing a symmetrical triangle. Now you're deciding that because I've identified a symmetrical triangle, guaranteed the market will definitely go in this direction because I've seen a symmetrical triangle. Yes, a symmetrical triangle can definitely give you confirmation, of where the market is going next. However, you need multiple confirmations. You need multiple confluences to give you confirmation for your trade that you're about to place, right? So there are multiple confirmations that you need to put together, right? So let's say you have you have multiple patterns, or you have your supply and demand, your support and resistance. You've identified that. You've even implemented, there's more things that we'll be learning throughout this module. So I believe that a lot of you are still beginners, so I don't want to get too deep into that. I don't want to divulge into that. I just figured that I can't necessarily do that yet, because some of you don't necessarily know what are these other confluences. So for now, let's stick with this, but I just want you to also keep that in mind, that you should not necessarily place a trade because you've identified one pattern. And now, so yes, this pattern is confirmation, but it should not be the only reason you decide to enter your trade. All right. So moving forward, now remember, we're identifying different types of triangles. So now we're looking at a bullish triangle. Okay. Now, the bullish pattern forms when two converging trend lines. Remember, your trend lines are support and resistance, right? We have our support and we have our resistance. When our support and resistance levels converge to form a point, right? When they converge to form a point, the bullish pattern is considered a bullish formation, and it usually forms a continuation pattern during a currency pair uptrend, right? So obviously, just to jog your memory a bit, if you did know this already, obviously the bulls are then associated to the market moving in an upward direction, right? So when you are seeing a bullish triangle, obviously this pattern would then be synonymous to an upward movement in the direction of the market. So that's why it would be named a bullish triangle. Remember, there are bulls and there are bears, right? Bulls are the ones who push the market up, bears are the ones that push the market down, right? Okay. Remember, guys, you are able to just interact as much as possible in the comment section. Feel free to do so. All right. Okay, so converge to form a point. Now, the bullish pattern is considered a bullish formation, and it usually forms a continuation pattern during a currency pair uptrend, right? So remember, we have reversal patterns, we have continuation patterns. So typically, continuation patterns are the types of patterns you'd identify whereby the market is moving in a specific direction, whether there's like a massive impulse or the market is just moving in a specific direction, and then there's a slight little pause, rather, let's just, for lack of a better word, pause, and then the market continues moving in its initial direction, right? It's like you walking, and then because you've been walking for so long, you decide to take a breather. And in this breather, you have to decide whether you're going to stop walking completely, or you're going to continue walking, or you're just going to come back, right? Now, as soon as you start heading that same direction you were walking initially, that means you are continuing your journey, right? So that's typically that's just a very typical example of what it would mean. Okay, so the bullish pattern is confirmed when the currency pair breaks out of the ascending triangle formation to the upside, right, and closes above the upper resistance trend line, right? So you can see over there, this is just a drawing. That's more of a realistic view of what it would look like on a chart, but this is basically on as a drawing. Right, so we have our resistance levels over there, we have our support levels over there. Okay, so however, if the currency pair breaks out to the downside, so let's say now you've identified that you thought it was a bullish triangle based on what you were seeing, the behavior, and then now, instead of breaking out long, meaning that it's moving to the upside, it is now turning and moving to the downside instead. Now you've identified that this is not a continuation pattern, this is a reversal pattern, meaning that it's not continuing, it's turning, right? It's turning. The market is turning in the opposite direction. Okay, so over here you'll see this is what a bullish triangle would typically look like. We have an uptrend over there, and you can see our lows. These are our lows over here. Our lows are getting higher. That low is higher than that one. That low is higher than that one. Basically, the lows are getting higher. And then we have our resistance levels, which are basically at a stable point, right? So there's no the highs are not getting any higher or lower. It's just basically like very stable, right? So we wait for the breakout. It's very important for you to wait for the breakout before you enter, right? Because if you don't wait for the breakout, the market could just turn in the opposite direction, and then yeah, I think we all know what happens with that. Okay. All right, so this is what it would look like on a chart. This is the USD ZAR chart, and we're taking a look at our 4-hour chart. So if you can take a look over there, you can see that over here, we've been extremely bullish because the market has just been moving in an upward direction, So as you can see, once more, we have this bullish momentum going on over here. We have this bullish momentum, meaning that the market is just going up, 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 up. And then at some point, it basically takes a breather. Let's keep it that. Let's say that, right? A breather over here, and then what happens to price? Price starts to range. But now, how do we know that this is a bullish triangle? Well, it's because we are able to identify, first of all, that momentum that have over here, and then we have our lows that are rising. Our lows are rising, and then we have our, our resistance levels over here just being at a stable point, not rising, not getting any lower. The highs are just, stable. So that's how we now know that, okay, this is clearly a bullish triangle. So we then do what? We wait for the breakout, right? We see that there's a breakout entry long, and then we evidently, go in the direction of the market. Remember, ladies and ladies, I'm seeing names like, Anthony here and things like that. So I almost said, ladies and gentlemen. Ladies, I don't mean to disrespect you like that. But anyway, this is basically this is basically what it would look like, and how you'd be able to identify it on your chart. Now, one thing also, when you are on your chart, as you can see over here, when you are on your chart, you never force a pattern, right? One character trait that you need to remember is that it needs to stick out and be very obvious to you. Okay, don't read too much into it. It needs to stick out and be obvious to you. You can clearly see in this instance, we have this impulse here, right? We have this bullish momentum going on here. And then what are we seeing? Okay, we see that the lows are getting higher, but our resistance levels are not rising or falling here. So which pattern is which pattern has those type of characteristics? It would be a bullish triangle. So you need to understand the characteristics of the pattern for you to be able to identify it. The identification will come afterwards. Okay, just taking a look at more of the comments. Okay, so that's what it would look like. Okay, as you can see over here, highs are very stable, but you can see here that this breakout over here is obviously way higher than what? Than these, these highs over here. It's way higher, and it has broken out of our resistance levels. Remember, this is also your resistance. This over here is your resistance. I'm answering a question over here. So you can see that this over here is your resistance. Now, once we have a breakout of this resistance, it has set itself free from the shackles of just ending here all the time. So it broke out of there, and that's basically what we would confirm as a breakout. So yeah, that's how you are able to identify the pattern, by understanding the characteristics of it. Okay, so now we obviously have the opposite of a bullish triangle, we have a bearish triangle. Now, inevitably, this one would go in the opposite direction. Everything that the bullish did, but upside down. Okay, now let's get into what that actually means. The bearish pattern forms converging trend lines. The bearish pattern forms converging trend lines, support and resistance levels, and unite to form a point. The bearish pattern is considered a bearish formation. It usually forms a continuation pattern during a currency pair's downtrend. Now remember, bears are synonymous to the market moving downward, right? To sells, to the market moving down. During a currency pair's downtrend, the bearish pattern is confirmed when the currency pair breaks out of the descending triangle formation to the downside and closes below the lower support trend line. So it needs to close below the lower support trend line. If, however, the currency pair breaks out to the upside, the bearish triangle is now a reverse pattern. So let's see what I'm talking about. You can see over there, we have, the movement going on. We have our highs, getting lower, but our lows are basically not bulging. They're not going any lower. They're not getting any higher. They're just at a stable point. But our highs, however, are getting lower. So with the bullish triangle, if we go back there, you'll see, I think I should go back there. You'll see that the lows are the ones that are getting higher, and then the resistance levels are the ones that are at a stable point. Okay. So you can see over there, even in the drawing as depicted, you are able to see that we have, the resistance levels are obviously falling. And our support levels are just, they're not bulging. Like I said, they're not getting any lower or any higher. They're just at a stable point. But if we look at the behavior, right, if we're looking at the behavior of price, we see here that, we were in a downtrend, and then we were just at this, ranging point. And then after that, how we were able to enter, we waited for this breakout and then entered only once we have broken out of our support levels. So once more, let's check it out on a chart, right? So when we're taking a look at this over here, we have Euro versus the Canadian dollar. Right. So remember, this is also a continuation pattern. If you just joined, I see there's a couple of more people who just joined. Welcome, everyone. We are not too far in. We are still discussing the topic of triangles, right? Different triangle chart patterns. So we're taking a look at that. And as you can see over here, we are moving in a downward direction, right? We're moving in a downward direction, bearish, a bearish movement. That's what the market's currently doing. And then now what do? We need to identify the characteristics of the pattern that is currently forming at the moment for us to know what is this pattern, right? So firstly, we see the movement over here, this little, this bearish momentum going on over here. It's a bearish momentum. Why? Because the market is moving in a downtrend. It's just been moving down. And then when we got to this point over here, when we look at this point over here, what are we seeing? We're seeing that our highs are actually getting lower. We have highs that are getting lower, right? And then our lows they're not going any lower. They're not going higher. They're just at a stable point over there. They're not moving, right? So what type of pattern? Sorry, ladies and gentlemen, ladies. Sorry, my throat, I think I'm catching on to a flu or something. So please just excuse that. So anyway, once we've understood the characteristics, we now need to find out what type of pattern has those type of characteristics. We look at it and we see that, okay, it's a bearish triangle. And what is a bearish triangle known for? A bearish triangle is known for, being a continuation pattern, right? Meaning that the market moves in a downward direction, right? We have this bearish momentum going on here, and then once we've identified the highs getting, having a downward slope, and then our lows not having any upward slope or downward slope, it's just in a stable format. We are likely to break out on the downside over here, and then it will continue doing what it was doing here. So basically, move, breathe, and continue. It's as simple as that. So now we obviously get to see the breakout once we have obviously surpassed the our support levels. Now obviously, once we are able to break out of our support levels, we are then able to then identify that we should be moving in the direction of a downward direction, because obviously this pattern is a continuation pattern. Now, like I said, I know a lot of you are going to ask me, but now how do we know, how to identify a breakout, whatever the case may be? I've said this earlier on, but I'll say it again, that you need to have multiple confirmations. And in our next lessons throughout, you'll understand what are those multiple confirmations to give you, to basically confirm that the market is heading in that direction, without just, trusting just a pattern, because that's not high quality trading. You're just, it's not, no, you need multiple confluences to give you that confirmation. So in this instance, this is just one of those confluences, but you can at least have about 3 more to say, okay, everything says that we are moving in a downward direction. I have multiple confluences, so then you get to enter that trade. That's high probabilities, right? So that's basically what would happen, even if you took a look at a real chart over there. Remember, what other pattern do you guys see forming? Well, has formed already in the past? Let me know in the comment section right now as we're on this lesson. What other pattern are you identifying, just to see where you're just to see where you are, mentally with all of this? Or what other pattern are you seeing that has formed before we get into it? Because there are multiple other patterns we're going to be discussing. No. Come on, guys. I'm talking about a pattern. I'm not talking about, I'm talking about a pattern. A pattern. There we go. There we go. Yes, exactly. Even though we were not going to discuss that, that's why, I said it needs to stick out and be obvious to you. A lot of people are saying that it is a double top. People are seeing a double top pattern, right? So how do you get to see the pattern? Well, how do you know? You need to understand the characteristics of the pattern. You need to know M-shaped format, right? It has a bearish bias. It is a double top. So that's basically what it would look like. Okay, anyway. So now we have, I used to love this one as well when I started trading. I still use it, but it was one of my favorite ones because it was super easy to identify for me. We call it the rising wedge. Okay, this is another pattern. And what is the formation, right? So rising wedges, they slope up and they have a bearish bias. So what does slope up mean? It slopes up. Do you see? So these formations are usually found in uptrending markets. Okay? If the price moves below the lower support trend line, they can become a reversal pattern. Okay, so we're taking a look at the rising wedge formation over there. You can see over there that the market, we were moving up, and then we had our converging trend lines, our support levels sloping up, and also our resistance levels sloping up. So if you can take a look at it, you can see that there is a conversion, but all of us are moving up, right? Resistance and support. When you draw it over there, you draw your resistance and support levels, you get to see that they're moving up, and they're forming a converging trend line, right? So converging trend line just means that they have like a meeting point towards the end. But I will show you as well what it looks like on a chart, okay? So that's basically understanding the characteristics. You wait for the breakout entry short, meaning that the breakout is going to be obviously I want to use the word short. Well, it's going to be moving in a bearish direction, right? It's going to be moving down, right? So, and then we also have a falling wedge. So we have rising wedge. A rising wedge has a slope up and have a bearish bias, meaning that the end result of a rising wedge, once you've identified it, it should be that it's going to obviously now reverse. The market's going to reverse, right? So it's going to be going up. The market's going to be moving up. Then have its the support level slope up, the resistance level slope up, and then the breakout comes back down. So that's a reversal, right? And then we also have a falling wedge. So the falling wedge, they slope down. Do you see the difference? The only difference is that this one slopes up and has a bearish bias. This one slopes down and has a bullish bias. So they're usually, excuse me, they're usually found in down trending markets. Now, if the price moves above the resistance line, which is this one, they can become a reversal pattern. So you see what it looks like. We're moving down. We're moving down, right? We're moving down. Our resistance levels are coming down. Our support levels are coming down. And then what do? We wait for the breakout. And once we have confirmation for that breakout, we enter long, right? So we now have confirmation. Once we've seen the breakout, we now have confirmation that yes, this is definitely, it has formed a falling wedge, and we can see that the market is now reversing and moving to an upward direction, right? So we were going in a downward direction. It was a downtrending market, but now we are moving back up, right? And we have to always wait for the breakout, okay? Always have to make sure that we break out. Do you guys understand? Are we all on the same page? Let me know how you guys are taking this. Remember, ladies and gentlemen, one thing I need you guys to understand, ladies. There's people here with really like men's names, so I don't know what to do about this. There's men's names here, okay? This is Wilson. I don't think there's a woman called Wilson. So yeah. Anyway, so what I was saying is that are you guys on the same page? Make sure you have your notebook with you. Note this down, ladies and gentlemen. And when I say notebook, I also include your trading journal. Your trading journal needs to have everything that you are experiencing, learning, going through, practicing. Everything needs to be journaled. It's very important for your growth as well, because sometimes you grow, you don't think you've grown, but when you take a look back at what you have learned and where you are, it helps you mentally as well, because it's just extremely important. So make sure you have your notebook. It's very important. Okay. All right. Sorry, your trading journal. Okay, so this is my favorite part of things. I'm going to definitely be giving you a bit of homework, and I want you to go onto your to your chart. I believe all of you have the MetaTrader 5 app. I know that it's giving a lot of Apple users a problem today because some of you were complaining about that. But when you do, I want you to identify the candlestick patterns on a live chart. That's what I want you to do. I just want to see what you guys come up with. It's going to be very exciting. So go ahead and do that, and you can submit them on the group. Yeah, you guys can submit them on the group. Super excited to check that out. Don't forget, ladies and gentlemen, you can use my personal promo code until the 15th of June to double your deposit. Okay, so make sure you use my promo code, which is Chantel Power. Use the promo code Chantel Power to be able to double your deposit, but it will only be valid until the 15th of June. So make sure that you do that. And now we officially have the Q&A session is open. So I'll be answering some of your questions. Guys, it's very critical that you ask questions, because there's certain things that if you just keep quiet about them, you end up making mistakes on your own, and we do not want that. Okay, I want you to be able to ask whatever it is. Remember, there are no wrong or right questions. Everybody started somewhere, so everybody is learning. So feel free to ask anything regarding anything, and I will be answering a couple of your questions before we end the lesson. But overall, give yourself a massive round of applause for being able to stick throughout the lesson and actually gain a bit of knowledge instead of rotting your brain on social media, not gaining, well, sometimes you gain something, I guess. But yeah, ask those questions. Let the questions start rolling in on YouTube. Ask those questions. I am having the Q&A session open, and the time starts now. If you're not gonna ask, I'm gonna ask. And if I have to ask, I'm gonna ask. Should the breakout pass the previous high or low? Okay, so remember, right, when you are drawing your resistance, for example, you have your resistance and you are expecting a breakout entry long, you obviously have your highs. Your highs are at a specific, they're not moving any higher than the other. Yes. So you need to have a breakout from those highs, meaning that now you have to break out from, the level that those highs were. So guys, also another thing is that there's a lot of stuff you're going to be learning throughout the lessons that we have coming up. So make sure you definitely stay tuned, because a lot of the questions you have now are going to be answered with the lessons that are coming up. So you need to make sure that you are part of those lessons, so that you can say, okay, this was actually what I wanted to understand. All right. So is there a noticeable point where price stops and changes direction? That's why I'm saying to you that you need to definitely make sure that you have many confluences, meaning that multiple reasons to understand where is the market going, to understand. And that's something that I'm also going to be showing you in these next couple of lessons. So this was your first patterns learning. And in the next couple of lessons, you'll be learning more than just that. So you'll understand how high probability trading works. How do you know when to buy or sell? Really? After that entire lesson, I'm assuming that you were not a part of the lesson. Um, and there's just multiple factors that go into you buying or selling. It's not just an easy decision. Like, in all honesty, there's a lot that needs to go into it. You don't just wake up and click a green shiny button or red shiny button and decide that you're buying. So, or selling for that matter. You need to be able to understand and do somewhat of an analysis. And in this instance, in this lesson, we learned all about technical analysis. What does that mean? This means implementing all these different types of, um, you know, patterns and all these the next couple of things that we'll be learning as well, indicators, whatever, all these indicators, all these things to understand exactly, depending on which instrument you're trying to either buy or sell at that moment and for how long at the same time. So that's where all of this plays a part. You don't just say you want to just buy or sell. Okay, it's not impossible to do that, but it's not wise, because why would you do that? You would literally just like lose everything if you did that. You need to be able to have backing as to why you're trying to do that. And it's definitely not very I mean, I'm a well seasoned trader, so that's probably why I would say that. But once you practice, you'll understand behaviors of certain instruments and sometimes even develop a liking to certain instruments. And I love NASDAQ. If you know me, you know that for sure. NASDAQ is one of my favorite instruments to trade. Um, yeah. Okay, guys. So there's also a lot of things that I want you to understand, that traders trade differently, right? There are a lot of traders that trade multiple different ways. And with that being said, um, I'm answering, I think, about three people's question in what I'm saying. So traders trade differently. And in all honesty, there are some traders who try and overcomplicate things. And then there are, there's just different ways of doing things. Do you understand? That's why there are fundamental analysts. There's different types of analysts. But, technical analysis is what I would suggest that you would prioritize, especially as someone who is still learning how to look at a chart and understand what it comprises of, and how to understand what is what on a chart. So technical analysis is basically a really good baseline for someone who is going to be, starting to learn how to read a chart. um, so if you are going to be learning something else, like for example what you have learned in this lesson, you take it and unlearn, or you can put away whatever it is you have learned, right? You put away everything, whatever it is you have learned, safely in a storage box, and take this information as raw as it is. Don't try and overcomplicate it. Process it as raw as it is. As raw as it is. If you have any questions regarding anything that you have been taught, make sure the questions are about what you were taught, so that it's much simpler for you, or in line with what you were taught rather. So it's much simpler for you not to overcomplicate and confuse yourself, because there's a lot of information out there, excuse me, that confuses a lot of traders. And trust me, there are a lot of traders that I know that are just as confused. So do not confuse yourself. Just always go into this lesson with a fresh mindset. What is the best way to master the charts? Learn. Be here for the next lessons so you can understand. So you can understand high probability trading. You should enter after the breakout, according in respect to what you have learned today. Which is the best pattern to use as a beginner? All the patterns that you have seen are all equally important. All the patterns that I've shown you today, and we've identified and understood the characteristics. Remember, the market moves in waves, right? Market moves up, down, up, down. If it's not going up, it's going down. And if it's not moving drastically up or down, it is ranging, meaning that it's doing what? It is just moving sideways. There aren't any drastic movements up or down, right? So there are those three moments that you would be able to identify now. Based on the behavior or what the market is currently doing, right? Let's say, for example, like I said, it's moving in a drastic upward direction this time, right? It's not moving in a downward direction. It's moving in an upward direction, and then it decides to move down, and then it goes up again, and then now you want, and then now it's moving. It looks like it wants to move down. Now you want to enter now, right? The market has already done that. You want to enter now. You want to know, okay, the market. I want to understand what am I gonna be buying or selling? What do you do, right? Because you're trying to identify a pattern. You're like, let me look at the characteristics of what is currently happening in the market at the moment. Okay, so we have an impulse. Okay, and then the market now decided to take, come down, right? Move in a downwards direction for a bit, and then go back up. Okay, so now it decides to stop right there, come back down. So on top here, we look like we have two tops that are basically just the same, right? We have two tops, our resistance levels over there, and now the market looks like it wants to come back down. And now over here, because the market came down, we have a support level. So what type of pattern has that? And then we see, double top. Okay, double top. Since that's a double top is known for what? Double top is known to have a bearish bias, meaning that because we've noticed that this is a double top pattern, the market is likely to go down. Now we understand that what is it likely to do? What's the market likely to do? Okay. And then what do we then do? We're like, okay, but we're not sure if, just because I'm seeing a double top pattern, the market is definitely going to be going down, right? And nothing is ever definite, by the way. So it's a very harsh word to be using, right? So now, for us to know that we will be going in a downwards direction, the market needs to pass what? Our support level over there, that we also call a neckline for that specific pattern. The market must the market must break out of that support level, because remember, it just came back and then went back up. Now we're waiting for it to break past that support level for us to see and have confirmation that yes, This is a double top pattern, and I should definitely break out short. So I should enter the short. I should enter the breakout short. So, but I can't just rely on that on its own. What do we then do? We see that we have our support level over there. Okay, there's an exit in the support level. We draw our supply and demand. We have multiple factors. What is your indicator saying? And we will also be learning about indicators as well, by the way. So there's a lot of stuff that you're going to be learning throughout module 2 that you'll understand how to take trade, how to actually place trades, and high probability trading in particular. How to understand how to take a high quality trade, and what are those factors you need. So your pattern is basically determined on what the market is doing. That's why there's multiple patterns. All the patterns that we've covered. What are okay, guys? You see, now if we have to step into time frames, a lot of traders, like I said, people trade differently. Okay, so let's just focus on this in particular. You choosing whatever time frame you're choosing, it has a lot of factors to it. What type of trade are you looking to be entering? Do you understand? And what type of trader are you at the same time? Because there are intraday traders, there are scalpers, there are so many types of traders as well. There's so many types of traders. There's position traders who hold their trades long term, so they couldn't care less what happens on a 5-minute chart. It really doesn't matter to them because they are looking to enter and benefit or medium term to long term gains. That's what they are looking forward to. So you need to also understand that what type of trader are you? What type of trader are you looking to enter? Do you understand? There's also swing traders. I'm also a very heavy swing trader, right? So short to medium term gains. What type of time frames would that? You'd be looking at a 1 hour chart, even 15 minutes sometimes, 4 hour chart. So you need to understand what type of trade you're taking, what type of trader are you, stick with that, right? And I also say that the type of trader you are goes according to your personality as well, right? If you are patient, if you're a patient individual with the funds to be patient, you can be a position trader because you are willing to look at the overall move of the market. Okay, and then there are people who are scalpers who basically look for very short term gains in the market. So those type of people will be looking at very, very small time frames because they want to enter now, exit now, enter now, exit now, enter now, exit now. They're those type of people. And when I say now, I mean like now, like after 10 minutes, now, oh, those type of things. So it all depends on all of that. And you just need to always understand what works for you and you stick with that. Don't complicate. Don't try and reinvent the wheel. Just follow and do what you need to do. And then you should be fine. You should be fine. You'll be super peaceful as a trader because you understand yourself and what it is you're looking forward to. Setting goals is also extremely important as a trader because if you're just coming in without any vision, without any goal setting, then you will definitely have a problem. Do you understand? So, yeah, ladies and gentlemen, that's what I will be. So that's what we'll be diving much deeper into in these upcoming sessions. Oh yeah, in these upcoming sessions over the next couple of days. And I really look forward to these sessions with you guys. The questions, you can keep them coming in, even on the Telegram channel. Keep them coming in. And I look forward to, like I said, having these lessons with you guys. But for now, that is literally all from me. And I wish you nothing but an amazing trading experience. Remember, you have homework. Go ahead and check out your chart if you are able to open it. Check out your chart and go and implement. Practice what you have been taught. Remember, don't fall for gimmicks. Avoid those type of things. Avoid confusing yourself because there's a lot of opinions. Just stick with what you know, what you've learned, and go with that. Okay, so yeah, that's all from me, ladies and gentlemen. Thank you very much and enjoy the rest of your evening. Good night.